Alright, in this video we're going to go through, first of all, July 31st, 2020. We're looking at the market selling off, and we're talking about going short when all of our trigger lines are going down. And when you guys, again, look, the idea behind trading is making money. And what I wanted to do in here is I wanted to talk, and we're going to do a lot of replay here. And again, look, when you talk about areas to sell, we talk about mid bands, we talk about fibs, we talk about trigger lines. More specifically on the 14-2 chart, get all these things straightened up here. You know, not only do you need to see the direction, and that's where the trigger lines and the strength of the trigger lines come in, but you need to see your entry areas. And again, when you do fibs, like we have this sell at the fib right here, very easily could go up to the mid band. So you can't have your stop very close. You know, typically a 3-point stop, probably on the S&P is what we're looking at. And so you can see we got filled going short with all of our trigger lines going down at the red Fibonacci resistance. And again, you can see here, I'll drag this box across. See how we hit the mid band there? You know, here's the, you know, when you're doing a trade, missing a really good trade versus risking a couple extra ticks. Big difference. In this, you know, I did the last video last weekend with last Friday's market. And we didn't talk as much about management. We talked a lot about Fibonacci and trigger line reading. And in this video, I want to spend a little more time on the management side of things, and maybe we'll introduce you to the market flow indicators as well. So, you know, again, look, when you get into a position, you have to really assess, should I stay in or should I not? And, you know, if you get a divergence, excuse me here, sorry about that. If you get a divergence, and I'm talking about on the lows, you really want to pay attention to where your trigger lines are. And, you know, if your trigger lines remain down, you typically keep going. Oh, well, that's easy enough. I had my, you know, if you have divergence, you know, again, you have to decide, am I getting out? Am I not getting out? And we'll talk a lot about, you can see we got the fibs here. We'll talk a lot about, and notice we had divergence from the fibs. Usually that's enough to make the market start going back up again. We're going to talk about market flow, and you know, again, this is the type of bottom where if the market flow had something right here at 32.50, which it did, I remember this one, you know, you'd have an extra opportunity to go long that you're not probably going to get coming off of a bottom. So again, we'll look at a lot of, and again, we're not doing a trade here, we're just talking. The fact that we had weak triggers on the 14-2 chart, we had multiple Fibonacci supports. Unless we break it and the fibs turn red, then the darn thing's going to go back up. And, you know, the idea is if you really know it's going back up, you know, in this situation, obviously there's, you know, you can see quite a bit of distance in that trade. The first trade short, kind of the opposite thing. We hit fibs and we went all the way back up to resistance. Now, sometimes you can take advantage of that, sometimes you can't. This is our stereotypical look right here. Triggers breaking fibs, everything's going really strong, so we're going to watch our smaller charts for trend trades, right? Pull back to the triggers, pull back to the fibs, that's going to be our trend trade spot. You know, one of the things that we talk about that, you know, again, here, watch. Let's get an order in here. And again, I'm doing this on a replay. So, you know, sometimes when you do replay, it's not always perfect. You're kind of speeding around a bit here. So I'm trying not to make this a 5-hour video. But there was so much stuff that happened on Friday, I think it really warrants a really deep, in-depth training video. If you're watching this video and you want it to go a little bit quicker, you can always play it at 1.25 times speed. You know, there we go. What did I just say about missing by a tick? Anyway, look. All right, we got film. Two things. Where am I getting in? Why am I getting out? And slow this replay down just a little bit. Again, once we start pushing, we have to kind of ask ourselves, do we want to stay in? Do we want to stay out? Where are we going to the Fibonacci resistance, and what's our trouble spot? So, the short was perfect, easy. The long looks exactly the same, right? So look at your short, strong triggers, fibs, everything's going down, nice and easy. Long trade, same thing in reverse. Sometimes they follow through, sometimes they don't. Now, one of the things that the market will run into is the yellow 1-to-1 dots on the bigger chart. See the dots at 32.61? That's a termination spot for us, and if we get divergence, it'll probably take out the low. So watch, I'm going to do a couple different ways, a couple different things, okay? You see the divergence on the small chart? It's 145, 135, the negative number with the little percentage on it. Then again, you don't see change happening on big charts all the time. And again, look, if it keeps going, then, just like last time, it's not going to be a big deal. If it doesn't keep going and it stops at those yellow dots, it has a tendency to go down and take out the low. So again, do we want to get out up here? No, not really. Do we want to risk a bunch of money if the market hits those yellow dots? Typically, the answer is absolutely no. If you get divergence, just get out of your position. There's divergence right there. And usually they take out the low. We'll see if they do. And you can see it's really a choice of stay in and hope they don't take out the low, and hopefully I get lucky, or off of those yellow dots, if I get divergence, don't lose, right? Maybe take a little bit, tick or two at least, because it's really frustrating to put your stop below the low and get stopped out and only to watch it run up. Sometimes it runs up, sometimes it doesn't. Now, if we get another divergence with a red background, we're probably not going up at all. So, again, it's kind of like, do I want to survive that bigger retracement? Do I not? And looking at the 14.2 chart and the 8.2 chart in the middle, you can see probably not a bad idea to have your stop below those triggers, which we'd still be forced into managing out of this position anyway. And again, you can kind of see a red background with a divergence, especially coming off of those yellow 1-to-1 dots on the 14.2 chart. I say it every day in class, and again, you can kind of lose yourself with the strong triggers, but then you go back and look at it in history and you're like, oh my goodness, those yellow dots did in fact stop the market once again. Now, this is a situation where you're going to get into a lot, and you're going to be like, oh man. So look at what we have here. Look at these triggers. The triggers are going up, the big ones, and the small ones are going down. And this is really kind of a blue fib, and we've got green triggers and red triggers, and it's kind of a, it's a 50-50 look at best. Sometimes they overrun, from these yellow dots, and if the large triggers stay up, it really makes it difficult to go short on the smaller chart. We're going to do it anyway just to look at it. The triggers weren't close enough the first time, so if we get, and again, here's kind of the fly in the ointment, so to speak. You're going to see this perfect look on the 5-1 chart. And notice at the bottom on our 5-1 chart, we have two divergences. See the divergences down there at the bottom? And, this is the type of thing that when you get two divergences, well, there you go, we got filled. It really, it's such a good look on the small chart. You may take an attempt at it, And if it goes all the way, I mean, look, we go all the way down to the fibs. But because we have two divergences and because the large triggers are up, it kind of puts us into a medium low probability trade versus a high probability trade. And again, the recognition of the mismatch on the triggers on the 14-2 chart is enough for you to go, okay, mismatch. And that's why the 5-1 look, albeit perfect. Well, so look, all right, let me talk about this here. Now, because it's a mismatch, what do? If the conditions change, what do? Do you stay in and hope and hope and hope and hope that it's going to go? Or do you try to get out on a pullback? And I think when you look at the smaller chart, it looks pretty obvious, doesn't it? Two blue fibs, green midband, and you're above your triggers. I mean, that's a graceful exit, I like to call that. It's a medium probability trade that, it's like you take a lot of those, but you also can't be overly committed to those types of trades. And it's easy for us to go back and say, oh, perfect trade, perfect trade, perfect trade, perfect trade. But sometimes you're going to take these where you get a mismatch. And again, we're still in a mismatch position because the small triggers are below the large. So even though they're going up, that's what creates the red background. So, when you have a red background on the big chart and a green background on the small chart, usually that's a warning sign for the management side of things. And you can see we got out break even, no harm done. And then it's like, okay, do we do the long, right? Even though the large chart's not great, should we attempt a long trade from support? And you can see if we got long at support, and again, if we did, which I didn't, but you can see, look at this chart. It's red, so we have a perfect area, but we have a mismatch of triggers, and that's what's going to cause this. See that little pivot stop out right there? If you did it, that's your either get out or get break even quick. Because that look right there, even though you can't see it in advance, it will usually make the market go down again. If it gets through it without any trouble and you can get to a break even, cool. You get paid for it. But you don't want to keep a big risk on if you're doing a trade that's not, super, super perfect. Does that make sense? Hopefully so. So, excuse me, I got a little allergies. But you can see, look, pivot stop out, double divergence on the top. We're going to probably go a little bit lower. Pretty easy read once you get once you get familiar with what look is going to maybe make the market go down. So you can see we're going down. So now we're thinking, oh, we can go short again, right? And I want you to see it's like the same thing again. I mean, it literally is the same trade again. It's short on the small chart, but I want you to still, and again, people get over enamored on the small chart sometimes. What do you see on the big chart? And again, this is where the market gets a little bit squirrely and it gets a little bit choppy. Again, if you did take that lower probability long, you can see pretty clearly where a pretty nice little exit is. So look, we'll take this short again. I want you to keep in mind why it's not great. The large triggers going up on the big chart, and again, this is where you don't know. I mean, if it takes off, great. And, again, look, we got to pivot down, so we have an opportunity to reduce our risk. So we're only risking 1.5 points. And if it works, we're going to make 9. So, look, I'm going to blow up the big chart again. With the first one we did with the large triggers up, this is short again, and look what the large triggers are doing. Still going up. And again, this is where a lot of new traders, they do a lot of trades, and they're like, why is it not following through for me? I'm having some difficulties with this. And, this is the one that if it goes, it's beautiful, and if it doesn't, you don't really want to risk too much money because you're going to end up, not having a high success rate with these types of trades. Does that make sense? And again, it's the mismatch of the triggers, and there we go, it got stopped out. And it's frustrating if you're staring at your smaller chart and you're not really paying attention to the larger chart triggers. And the fact that the large triggers are still up, and we've tried to go short twice to no success, you can kind of see why that is just intuitively, right? And the point is, don't hyper stare at your small chart too much, because again, if your large chart really agrees, the trades are so easy. And when it doesn't agree, you can see what happens. It gets choppy. It's early morning here. It's only 4:20 in the morning, so they get a little choppy sometimes. I mean, look, they're going to do the right thing all the time. And again, look, we're going up again. Both triggers are up again, but they're on the wrong side on the big chart. So look, this right here is another spot for that trade. And again, this is the fourth trade that you could have done in here. I'm not going to do it, so it'll probably go, but the whole point of this is, if it's mismatched, if you do take it, obviously be very cautious with it. If you can't be, pinpoint cautious with it, then just don't do it when it's a mismatch. Leave it alone. And if you don't do it, it'll run up for sure. And if you do it, it'll go down for sure. So, there you go. Up for sure. There you go. Anyway, you get the idea, right? The 50-50s that are with the large triggers, both of those had some success. The short trade, moderate trades against the large triggers on the big chart didn't have any success. Hopefully that will help you when you're working on your plan. If you're going to lean towards a direction, the edge of blue fibs with the green triggers going up on the big charts, probably your better moderate trade to be taking. Now look, we've hit a perfect termination condition. Divergence on the small chart from fibs and a pivot stop out at fibs on the big chart. So that should be a top, right? Now, unfortunately, it's going to be a top, but you can't do anything about it because the large chart just isn't right yet. And you're going to get that from time to time. So, you have to kind of say to yourself, what needs to happen in order to, let's say we go up. I mean, we're a long way from going up. Look at both of the triggers on the big chart. They're trying to hold support. And look, this is how easy it is for us. When the triggers are going down on the big chart, we just have to wait for support to break on the small chart. If it doesn't, we don't have to worry about doing a trade. If it does, then we know we can do a trade. So it's really kind of just that easy. So we're in sit and wait mode at the moment. Another divergence with a red background on the small chart probably get us going. We'll see. And again, this is kind of early morning, but I thought it would be good to kind of narrate through this because there's not always a trade. And so many times traders will try to force a trade when the indicators don't quite agree. And they end up getting a little bit frustrated, or they get chopped up a little bit. And you can see definitively, I mean, if we break the low at 32.55, there's not much else holding us up. So we're going to probably get a short trade if, and that's kind of what you're looking at when you're looking at your chart. You're saying, okay, since both triggers are down on the 14.2, if we break, which there you go, see how we're breaking through on the small chart. Now this is a totally different scenario. We've got all of the triggers on the big chart actually helping us. So this is a much better scenario for us for going short, right? Now that's a little early, as far as the area goes on the smaller chart, but since, the triggers are caught up now. So usually if you get going really strong, then you want to use those yellow 1-to-1 dots, like a tick ahead of them or so like this. And it's not that it can't go up to 57, right? It could go up that high, but usually if the triggers are really strong, meaning the small triggers on the 5-1 chart are very well below the large triggers on the 5-1 chart and on the big chart, usually the retracements aren't quite as deep. So, again, the only, I guess, line on the chart we have to worry about is this kind of little divergence at 53 out in the middle of nowhere. It's not going to stop us from doing a trade. When we have every fib and every trigger, I mean, there's very little on the planet that's going to stop us from going short, right? And look, here's the beautiful part about this. Where are we going? I mean, look way down there on your chart. See if we can get a fill here. Look way down there on your chart. 32, 47, 50. I mean, way down there is your target. So, the direction is good. The amount of money we can make if it goes all the way is good. You don't have to trade for the whole enchilada every time either. Again, to get the most out of your software, you need to do what it says. And that's really, I think, the learning curve is you have to understand what it's saying and understand why it's saying it. And again, look, we're getting a nicer reaction off of this area. See this? It's expected, right? Right from the 1-to-1s and the fib. I mean, pretty easy, right? Now, we're in a situation where we got to that 14.2 divergence line and probably not going to hold. Look at the triggers. So, again, this is where, look, you're already up $400, give or take. At the low, you're up $400. So that's half of your daily goal. And again, do you want to get really tight on the position like this and then you get bumped out? And do you still want to risk money on the position? Right? So again, it's a function of reading what's on your charts. Yes, we have a divergence low on the 14.2 chart. You can see that cyan line. Traditionally, if it's really strong, you're just going to sell some more, if it comes back up there. Usually they'll come back up and make a little double top, and then they'll drop like a brick. So the question remains, what do you want to do when it looks like this? Unless they really give you reasons to get out, you pretty much hang on for dear life and hope that the resistance up here, right, if you're going to sell some more, does what it's supposed to do, which it should, right, looking at the triggers. So, again, we want to get all the way down here to these fibs at the bottom. Now, that's the big one, right? That's 8 points. So that'd be a whole daily goal right there in one trade. You don't have to get it all. Now, I want you to look at your 5-1 chart. We have 2 divergences. And again, 2 divergences on the 5-1 chart. I still don't even care about it, to be honest, because the large chart is so strong. The only difference if we start to progress through this is that the price on the 5-1 chart got above the 5-1 triggers. You see that? So if we make a third divergence with a higher low above those triggers, we're going to be in trouble. There's your trouble. See that? Right there. And now you're like, oh man, if I get out, it's going to go down. If I stay in, it's going to go up. What do I do? Right? So you're talking about this spot right here. This is where, the guys that have the market flow, guys and girls, gals, right, have the market flow. And look, another little pivot stop out at the triggers that have rolled over on the 5-1 chart. If you leave your stop up here, you're going to lose a lot more money. So, I'll leave it up there and just show you. So watch what happens. And again, we had a good battle. Look at that, we're out. We had a good battle, but you could really see the management unfold. So look. Again, I'll look at the 5-1 chart first. Look, perfect trade. 1,000 out of 1,000 times you're going to take it. second divergence below the triggers, third divergence above the triggers, and then even a pivot stop out that really sealed our fate right there. What I want to do is let's look at the market flow chart. Because again, the market flow is one of those things that you'll add on later. And again, I want to show you the three spots that we had. And again, the first two spots I don't think you really worry about. So the first divergence, the market flow says up. Now, you don't listen to it, the market flow, because everything is too strong down. The second divergence even is below the triggers, right? But it's also from a high volume line on the market flow, and you're like, oh man. And the third, when you get that pivot stop out, if you have a white paint bar into a pivot stop out, you have to get out if it gives a long signal. So you'd be out after that yellow bar up with the arrow signal on it. So look, third pivot, it's really a pivot stop out, not a third divergence. The difference is you make some money or you lose some money. And I'll show it to you. Let's do it this way. Here's the same areas. And again, the first, which is really the second divergence, and second, which is really the third, you can see the progression, right? Trade, and then right there we get the pivot stop out, and the difference in where you would get out is very dramatic. So if the market flow agrees with your exit and you have multiple divergences, probably a good idea to take it. That's the point I'm trying to get to. And you can't see that on the big chart. On the big chart, you don't see the change. Just the rules as they are on the big chart, they're there. But again, looking at the big chart, it looked like we're going to go drop 100 points. And that's, again, the idea is to take it all, but you have to also, at some point they're going to beat you out of your trade, and you have to really listen to the thing. So let's take a look at again, you could defend that all day long. But now you start to add the thought process like, well, we had a divergence low on the 14.2 and all of those things happened. See how that works? So, it's kind of a layering effect where it's like, it's not just one thing, but when you start layering together the divergence line on the 14.2, and then you get the multiple divergences, and then the market flow, and, you get a lot of reasons why we might go up again. So where are we at now when you look at your chart? The large triggers are crossed up again. The small triggers are trying to catch up on the 14.2 chart. Not quite there yet, right? So we need another little push up maybe, and then maybe we'll go take stabs at long trades one more time. All right, so see how we're pushing up a little more? And again, for us, one of the trades that we really love with the direction of the indicators is this, it's a trend trade, but it's a pivot stop out of a prior divergence low, that little cyan line with the blue. So, again, I'm spreading things out here. Triggers are not bad on the big chart, right? And you get this a lot where you get a kind of a fake out breakout. They tried to go down, they couldn't, so they're going to go up. And usually the divergence on the highs on the small chart are going to help us out, and it's going to make the market come back down and hopefully pick us up for a long trade here. See how I did this? I'm right at the edge of fibs, plus I'm right at the top of my triggers. Maybe that 1-to-1 just popped up, might be a good spot. Let's give it half a second here. You see what I'm talking about, right? So, it's like, didn't quite, all right, we got it. Oh, all right, we got it. We're in. So that's what you do. You're like down, down, go down, go down. And now, again, looking at the big chart triggers, they're not overly strong to the upside. But we made our trade, and again, if you stretch out the box and you kind of look at where the bottom of those triggers were when we placed the trade, they can get down there. It's okay. Notice the yellow 1-to-1s on the 8-2 chart should help us out. And again, because it's not overly strong, we'll reduce our risk after a pivot. And notice we have now the third divergence working. So we have 2 at the top, and now this is the third one working. So we want to be assertive with our stops. Does that make sense? So we took the trade, everything's great, and we've got, again, this is a lot of the management talk we're talking about here today. Look, perfect short, and then divergence messed us up. We got a good long that had divergence ahead of time, but it's this one right here that's going to either, if we get it, so again, if we get it, it's going to really ruin the party, because 3 divergences will end a trend. Oops, sorry. There we go. And again, this is where, don't lose money, I guess is the best way to put it. That's simple enough in it. And look, because it's been a little bit choppy this morning, I want you to also look at our market flow. Remember what we talked about with the market flow. If you get a white paint bar into a pivot stop out, remember at the bottom before that yellow bar up, we had one on the 5-1 chart? Well, now we have one here. So it's a white paint bar into a pivot stop out. Almost always that darn thing goes back down. But if it doesn't, great. We'll get up to the fib. And it never hurts in a sideways kind of choppy market that's not following through to kind of adapt a little bit and take some money if it starts to stall. Now, one of the other things about a white paint bar up, especially if we're anticipating a third divergence, look at where we'd be getting out using a 5-1 chart. Using the market flow chart, we can kind of snug that thing up, because if we get a down bar after a white paint bar, it's going to end up giving us a signal on the market flow. And if we get a signal on the market flow like that, see that? Well, that's kind of a triple signal. We get an arrow, we get stranded buyers, we get an antenna bar with an arrow and stranded buyers. I mean, that's a really negative bar right there. And again, when it made the bar the new tick, it got us out. And this is what it's going to look like on the 5-1 chart. And again, you kind of, you always run the risk of it never making divergence. So if it doesn't, it's going to look kind of silly. If it does, then it saves you a little bit of money, and you have to there's our divergence, so we'd be out anyway, 3 ticks better. So if you want to wait that extra 3 ticks for divergence. Now, the other thing that's, if you get 3 divergences on the small chart, it has, unless the market's been heavily trending, that's the exception. Right, which it hasn't. We can pretty much say it's been choppy, right? Pretty range bound. If you get multiple divergences, it means that the market's not going to keep trending. The only time where this is not usually the case is a heavily trending market, which you can see we clearly don't have. Pivot stop outs on those divergence lines on the 5-1 chart. I mean, it was a perfect bottom had we have taken our money. It was also a perfect top if we would have taken our money. So again, we're kind of, again, look, divergence, and then divergence with a pivot stop out. Divergence with a pivot stop out. You see the pattern, right? You don't have to stay in, but man, we lost one and we made a little bit on one. Could have made a little bit of money on both. We wouldn't have gotten rich, but we would have not lost money. So again, hopefully this, all right, now we got everything going down again. So again, now it's clean up. Now we're repeating process. We came off of fibs at the top with divergences on the top, and everything is strong, and now we're going to make another run down at that support. So look, I mean, you don't need a lot of charts to really pick the spot. Let me set up. And again, we're on replay here, but we're already up 700, so that's not bad. We had one good one and one loss, one break even, and so we've had a couple trades, quite a few trades already. You don't need a lot to see this one, do you? I mean, this is perfect. Every trigger and the fibs on all the charts, and everything's going down, and once, finally, it's, again, I had the benefit of market replay on this one. So let's take a look at our market flow. Does our market flow also help us? Absolutely. I mean, we have nothing but sell bars. We have a pink high volume line, which might end up helping us with resistance. All the triggers are going down. And again, you don't want to stare at the market flow too much, but when you're making a key decision, whether you're getting in or whether you're hanging on to a position, or whether you're looking to manage a position, or whether you're looking at a top or a bottom, those are the times you really want to pay attention to the market flow chart. So this one, look, this one is crystal clear that the market flow and the triggers and the fibs all agree. That's the mother lode. And look how easy that was. So, again, we kind of battled through some chop, and then we got an easy one right there, didn't we? Get that out of the way. I mean, that's across the board as easy as they get. And in theory, that's what you're looking for, right? So, look, we get to fibs, we start the process over again. What's the process when we get to a blue fib? The first thing you ask yourself is, where are my triggers? So look, right here. Traditionally, when the triggers get beyond, we're going to keep going. So get ready. And again, sometimes it happens pretty quickly. If the fib holds, then it's going to hold. That's fine. So you can watch your 5-1 chart for this. Triggers are kind of passed on both. Look at that. There it is. Right there. So now the small chart agrees with the large chart and the breakout and everything else. Let's see if we can get a pullback. So again, sometimes when the market trends, look at the 14-2 chart. Look how obvious those triggers were going to the downside. And again, we broke, and our, the thought process for us is hopefully we get a pullback, because look at where our next fib is. We've got plenty of room to get back to the next fib. And again, keep in mind, we could go a little beyond the triggers, closer to the mid-band. So, again, this is a situation you're going to get a lot. Triggers are down, down, down. We're selling fibs and selling the small chart. And still have a blue fib on the big chart. Doesn't scare us, right? It doesn't scare us at all. So look, we went a little higher, closer to the mid-band. Now we got to pivot so we can reduce our risk. What's going to keep us in? What's going to get us out? We have one divergence on the low, right? And we just reached the prior low. Some people will take half their profit right there. So we have to kind of work, there's our second divergence. What happens when we get a second divergence? So let's take a look at the market flow here and just see what it says. Should we leave it alone, or should we get out of our position with the second divergence? And we're looking at this spot. And again, hang on, let me redraw that. This is one right here where the market flow really, really says everything's going to be okay. If they get you, they get you. It should pull right back up into that little resistance line, and then we should go back down again. And again, this is where, you're battling the market flow versus the two divergences. And again, if this spot holds, it'll really be good. And if it does, that's going to be great. And, well, we should still get a down bar here with an arrow, right? And, well, it didn't work. That's okay. I guess we got to lose one every once in a while, right? The market flow said stay in. That's why I didn't touch it. If you do what the indicators say, most of the time it works out, but every once in a while they're going to get you. So we lost a couple points there. Here's the problem. When you look at your large chart, we're still going down unless they really do something dramatic, right? And you don't have any way to get back in again. Because you're like, should I sell that yellow 1-to-1? How am I going to get in? The small chart doesn't look good. But I still want to go short if I don't make up bars on the big chart, the 14-2. So most people would just sell at the yellow 1-to-1 and hang on for dear life. Again, that's a bit, the experienced traders know why we do that, because the yellow 1-to-1s, see it at 32.49? Traditionally, those yellow 1-to-1s are going to make the market go down. And they'll just sell. The other way to do it is, if you get a market flow reversal bar. So look, I stopped it. See the reversal bar on the market flow? Nice sell bar, a couple pink dots. You should just go. There's a white paint bar. You can go after a white paint bar too. Because that, whenever this white paint bar is the second bar, it's usually going to go. Anyway, traditionally, I like the yellow 1-to-1. Again, that's a little more experience versus, allowing something to get you in like a market flow reversal bar. Should have been short from like 47. Would have been a better spot. But anyway, now look, we have to kind of ask ourselves, we get into the same situation. It looks good. Everything's going fine. And, we're looking at our market flow chart and we're asking ourselves questions. So look, if you weren't in, this would end up being your short trade right here. You'd probably go short on the way up at, 42.60. But again, look, you see the spot right here? You get the market flow signal and the market flow resistance. Everything market flow and the larger chart says we're going down. And again, you can't overanalyze the darn thing. Yet it has to be because, you have a dramatically down 14-2 chart and a dramatically down look that should make the market go down. Anytime you're taking market flow signals, and again, this is where having multiple contracts, you could do two things. You can take half off. Let's say now I'm short 4 since I got back in on that market flow signal. So look, I can right click on my chart. Again, we'll look at our smaller charts here. See this? And again, I think, side by side, we've got a really good look for the market to actually go down. And, again, this is where I know we had a loser, and that's okay, not a big deal. I think we can really defend selling Fibonacci resistance at the 46 area, 32.46. And the reason why we can really defend it is because the strong triggers are down on the big chart. The market flow said it was going to help. We have lots of resistance. If you look at the 8-2 chart, our stop's out of the way. See that? It's behind everything. And, unless, and it's not that you can't lose. I mean, obviously, you can always lose any trade. The odds are really stacked in our favor in this situation, especially when the market flow agrees. You got signals, you had high volume lines, you had pretty much everything on the planet said we should go down. What more could you ask for, right? Follow through. we've had a little bit of a follow-through issue on some of these today, so we'll see if we can get some follow-through here. Notice on the 8-2 chart where my stop is. My goodness. I put it above the 1-to-1. I put it above the mid-band. I put it above the 14-2 reversal bar marker. They're going to have to earn it if they're going to take it from me. And again, I want to reiterate the market flow chart here. The reason helping, we have resistance, 1-to-1s, a high volume line here. So, man, they're just running stops again, hopefully. I guess if they do break all that, we'll be out of our position. Traditionally, that's everything on the planet. All the 5-1, the 8-2, the 14-2, and the market flow all at the same spot. You really can't get anything better than that. And, again, the more the market goes down here, the easier it's going to end up looking in the big... All right. They're horsing around here this morning. Again, watch. Simplify the vision for you. Stare at the large chart. They've been horsing around here, but they horse around sometimes, and then they stop people out, and then they run down, and that's traditionally what they like to do. They got me on that first one on the left, so I wasn't going to let them get me again. If we'd just had a big enough stop on that first one short, we would have never had to get back in, or we never had to mess with anything. If we would have forced them to come get us. Anyway, that's okay, no big deal. Now, seeing as how we added on, we got out a half at the fibs, and then we have to kind of look at the strength of the market. And, again, sometimes you get these overwhelmingly strong runs. Look. It's just another trend trade short on the 5-1 chart. You see it? Short from the mid-band and 1-to-1s. There's no reason for the market to go up. Now that we're retesting support again with divergence, we want to start being defensive on our position. And again, a strong market, strong triggers, sometimes they pop through and they make it down to the next area. Conceivably, you could have added on at the 32-42 area. So look, super strong triggers. We'll see how they handle this area right here. Yeah, I have to think about it. I guess 32-42 would have been a nice add-on. Maybe even one more add-on. Make all the money all the way down, right? They're not going to let us have any more, are they? Anyway, that's all right. Cancel that. All right. Well, we made it down to the bigger fibs. Pretty easy, right? They horsed around at the top on the small chart. And again, that market flow, again, when you look at the 14-2, this is obvious and easy, right? It's always easy looking on the 14-2 after the fact. Got bumped out up there, which, again, if I made them work for it a little harder, they wouldn't have got it. But anyway, I guess it's good talk. Market flow helped that second one a lot. That was another trend trade down on the 5-1 chart. And then now look where we're at. A whole bunch of blue lines. So we're going to have to pay attention down here and see. Again, same thing over and over and over. We reach the fibs, read the triggers. And sometimes when they're really strong, they just keep breaking. This doesn't look so bad when you look at the 8-2 chart and the 14-2 chart, does it? Selling resistance, getting out at supports with everything going down. Don't let the little stuff shake you out. Easy to say, hard to do when you're live, in the situation. And, if you're really nervous and you're not comfortable with your fib and trigger line reading and what should happen and what happens most of the time, you're looking for any reason to get out of your position. And if you look for any reason to get out of your position because you're nervous, you're going to find one, I promise. All right. Short-term fibs are holding. Let's see. So look, we're going to stare at our triggers. and oh, never mind, hang on. That's a little bit quick. That's not maybe the best entry. See how all the triggers are already through? In a strong trending market, it's tough because you're like, oh, is that really going to go? And again, if they're really nice about it, they keep going. Usually when the triggers are starting to get really weak and you get to a double bottom, you want to make sure you're being defensive. It's moving so quick and straight line. Don't have to worry about it too much. Now, should I stay in or get out? Well, I guess I don't have to worry about it, do I? We made it. Easy enough. And again, man, it's so nice if they get this strong trend. I mean, they kind of tortured us with a little chop up at the top in the beginning that we could have battled through and maybe made a couple long trades with large triggers. But again, once everything really starts cooking in the same direction, then, you know, it's a heck of a lot easier for trend trading, isn't it? All right, we're at fibs. What's going to happen? Well, we have to read our trigger lines, right? Same thing, and what do the triggers say? Hey, the fibs are good, right? So now, you know, this is a situation that happens a lot after a strong trend. We get stuck in between support and resistance. Traditionally, you know, this is what we're looking for long trades, right? And, you know, you have to ask yourself a question. When are you going to do it? Where are you going to do it? Why are you going to do it? And again, if you do it, you have to kind of be aware that you're coming off of resistance in a downtrend, which doesn't make it as easy. And this is where I think the market flow traders really have an advantage. Here, look, let's take a look at it. This is the look with the market flow. And again, you have to only do it at those specific spots. But look, our short trade, I mean, market flow said, yeah, go ahead, easy. Then once we got to the bottom, you know, we had antenna bar kind of, white paint bar, a whole heap load of blue fibs, right? That's kind of the look when you get that white paint bar second off of the bottom. See the green line that goes across? That's kind of the spot where it goes from almost all the time. So if you were going to try to take advantage using the market flow, remember what we said about a white paint bar into a pivot stop out of that divergence line? You know, those are the spots where we like to take advantage. And it's, you know, again, you can run a really small stop because if it doesn't give you that one bar up, then the party's over. If it gives you that bar up from the green line, usually the first one, not the second one as much, but you know, and then, you know, we get up to resistance, and that's a pivot stop out of a divergence on the market flow chart. Now we're in a range, right? And again, the market flow sometimes is really nifty for trading the range. You can go back and justify a long trade here on your big chart, can't you? So the market flow agreed with what you wanted to do, so it allowed you to get that trade. And now that we trade up into resistance, you can look at it again. Because, again, look, white paint bar into fibs and a pivot stop out, usually that's going to make the market go back down again. So if you saw that white paint bar, you could exit on the way up and not, you know, give away any of your money. And again, traditionally, that'll make it go down off of the resistance in the midband. So you can see maybe a couple of extra trades using the market flow in between, you know, some pretty well-defined areas. Pretty cool trick, right? Now, I didn't do them, so it's not really going to be reflected in the bottom line, but when you look at it on the 5-1 chart, you know, it makes sense, the first one at least, the long, right? And maybe not the short at the top, but at least an exit. And that's what you want. You want the market flow to be in conjunction with fibs and triggers and the read. You want to use it for a couple extra opportunities. You want to use the market flow if you're heading into a multiple divergence management situation. Really helps out a lot in those situations. So hopefully I've given you guys some things to think about. So look, here's where we're at right now. Again, replay, but you guys saw all the trades and winners and losers. And again, we could have done a little better, but we're already up $3,500 with a pretty good win-loss ratio. So again, we'll keep going here if you guys want to keep going. And it's only 10:40, so again, we'll do some more here. And this is what you guys should be doing when you're practicing with your market replay. You should be watching the market, talking through what you see. When are you going to get in? When are you not going to get in? Why are you going to manage your trade? What are the indicators saying at every particular moment in time? What do you anticipate to happen based on fibs and triggers? And then ultimately, is there a trade to be done, or is it something, it's nothing really to be done? And again, the market flow gives you a couple cool tricks, at tops and bottoms or pivot stop outs. Again, notice, we've got support here in that green line, but, we're really struggling off of resistance too. So, that's kind of like one and done, or, because again, not that you couldn't buy, but sometimes you get into a range and they don't always follow through. Notice the triggers were down there too on our 5-1 chart. Triggers going down on the 5-1 chart, not the best look for going long, is it? So, again, you have to, don't overdo the market flow and don't force it to try to do something when it shouldn't be doing it. You have to have justification for everything you're doing. Fibs and triggers, so again, fibs and triggers, I guess, kind of justify going long one more time in the range. And you could see we knew we were going to be in a range before we ever got there because there was too much resistance and too much support to deal with. So as such, you can trade that range if you can get a couple opportunities. Now, we're going to break out of it eventually, right? We always do. So trigger, 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 trigger. That's what we're looking for. And there's two things I want you to notice here. Number one, when we hit the fibs, and then number two, what the triggers are doing afterwards. See so if you go, we're going to go large chart, small chart combination. The large chart triggers, which you can see on both the 8-2, 14-2, are very strong up. The fact that the triggers are also breaking through on the 5-1 chart gives us kind of a heads up. And again, you have to be kind of careful, when you're dealing with fibs and mid bands, but we really came off of that bottom strong. Notice that the 14-2 chart had two divergences on the low. So usually that's a good bottom. And usually when the triggers are that strong on the 14-2 chart, we usually keep going up through the fibs. Strong triggers have a tendency to break things. And again, you can see they're kind of tempting you, going, do you want to go long, but you're at resistance? Do you want to go long, but you're at resistance? So, again, when the triggers finish, again, the triggers are nice and squared up here. Notice the 1-to-1 on your 8-2 chart. Those 1-to-1s, when you break them and pull back to them, are pretty powerful. And then notice our fibs have changed colors on our 5-1 chart. So this is really our trend trade look, right? Triggers are past, the fibs are changing colors because the triggers are past, and this is essentially, our trend trade spot right here, isn't it? Oops, that was a one lot. Hey, hang on. Shoot. I guess we'll be long 3. Anyway, sorry, should be 2, but you get the idea. 1, 2, 3, or 100 doesn't really make a difference. Nothing is going to change the outcome of the trade. It's either going to work or it's not. And again, look, we're trading. Well, it's quick. That's easy. Notice location of the small triggers versus the large. They're so strong above it. This one really makes a lot of sense when you're looking at. Now, look at the fib. Usually when the triggers are this strong, we break the next fib. So, there's a chance we keep going here. Well, there you go. That basically sums that up. And again, that was a big chunk of money right there. I mean, I'm talking 7 points, which is $350 a contract, give or take. So, again, there's a couple things to notice. Super wide triggers on the big chart. First. I mean, that's clean up. Look, super wide. I mean, you can't get any wider and stronger than that. So you couple that with the breaking on the small chart with super strong above the super strong large, and the fibs changing color makes a pretty easy trend trade. Now, it's so strong, I mean, it's going to keep going, right? I mean, and again, that's where you decide, do I hang on for a little more? Do I maybe look at the market flow, wait for a down bar? Sometimes you can get a little bit of a runner, but I mean, 7 points, how are you going to argue with that, right? And accidentally on 3 contracts, so that's $900 plus. Anyway. All right. Always easy when you're with the strong triggers, isn't it? Say it out loud and say it over and over and over again. Now, we didn't even look at the market flow, did we? Didn't need it. We weren't in a situation where it was iffy. So, this is one of those iffy situations. I want you to see. Because you're like, should I buy? And we did this in class, so I know what, I know what's going to happen, but I want you to think your way through it as opposed to just saying, I'm going to do something. Since our trend trades are supposed to be inside of the triggers, you have to, are we going to go long if we're below the triggers? And if you get into one of these yes or no situations or you're not sure, I'll show you the market flow again, because I think the market flow is really beneficial when, like I said, at the tops or bottoms, at the major fibs, or if you're at a situation where it's like, should I go long at a mid-band and fib, but it's on the wrong side? And you can see we're kind of getting a white paint bar down. Usually we get a signal up after that. Since it's not in an area, we're not going to do anything with it. See the white paint bar down? There's our signal up. Anyway, a lot of our traders will buy the white paint bar down, but it's, there's no area right here to contend with. So no area, no trade is the way I like to look at it, especially for new people. It's just too difficult to try to figure out a trade out in the middle of space. So no area, no trade. Let's get to the area and then we'll let the market flow tell us. Okay? If we get a signal, we'll just go long a little bit late. Right here. Make sense? If we get a signal, we'll go long a little late. No signal, no trade. Since it's on the wrong side and it's iffy, and well, now it's turning red, so it's kind of answers the question. But look, no signal, no trade. And that again, I think is a really good added benefit. Market flow says, no, no, no. So again, if you're in that 50-50 or you're in a spot where you're like, I want to go long, but I don't know why I would. So, and again, wrong side of the triggers is a good situation for that. So in this case, the market flow kind of kept us out of a loser. So if you got long there, you would have lost. And it never even blinked. So, again, you get to those iffy areas on the wrong side, you can see pretty helpful, right? Anyway, get that out of here. Alright, you guys getting tired? I know this is a long talk for me, going straight through, but let's do some more because, again, look, last Friday was really good for education. If you haven't watched the video, please do so. This is the same type of video, but I'm trying to go more in depth into the thought, the thinking, the management, maybe adding in the market flow. So hopefully this takes you up one more level, and you can really kind of see how the market flow adds an extra layer of confidence or confirmation to what you're doing. This is that tricky spot for people. Remember, we had this early this morning. The large triggers are up, and you're thinking, hey, I want to go short. And I want you to see it, because it happens every time to people, because they're like, yay, large triggers are up, but the little chart looks pretty. So this is a battle where it's not a high probability trade. Is that easy to define? I mean, the triggers aren't perfect, so, again, when you look at the little chart right here, I mean, it looks perfect, doesn't it? Sometimes they win, sometimes they don't. Again, maybe if you had a market flow signal here and you wanted to take a 50-50, cool, but this is just not my favorite. And they win sometimes. I'm not saying that they don't, and you can make a case for being short, right? Short with a pivot stop out. And you could see if you went short, I guess, well, you got divergence. It'd put you right into stress. Another divergence, and then a pivot stop out. Usually that's your short if you're going short. Anyway, it's not a good match, so I'm just not touching it, but you can see how people could make a case for going short there, right? Some do, and look, if you did, I guess you could get away with it as long as you didn't get too squirrely with your stops. Tough to do though when the triggers are mismatched, so I didn't. But here, this one's the spot. Let's get in. See, now all the triggers are going down, and all the triggers agree, and everything's headed in the right direction, and we got plenty of room to the next fibs. That one is a little easier visually, I think, in my opinion, the way it looks. And then let's look at the market flow. Remember about a white paint bar up into a short spot? That means go now. Because by the time you get the signal, it's going to be too late. So usually the next bar, when the triggers are down that strong, it's going to be a down arrow. And there's your arrow. And generally, you don't have to have your stop too far above the arrow. So, again, I'll leave it. I'll pull it down a little bit here. Usually when the triggers are that strong, you just don't have too much trouble with your trade. And anyway, now watch. You got within a tick. Watch what happens. Let me do this. I got divergence. I'm going to get out. Should I have gotten out? This is where you're going to look back and go, oh, man. Watch. Look at the market flow. This will help you. Watch. Watch what's going to happen. 14-2 chart says down, 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 down. Now we're at the mid band for down, down, down. It's probably going to go down, down, down. And if we would have waited for a bar, we could have moved our stop behind the pivot and got the rest of our move instead of jumping out because of divergence. Now, would the market flow help us in this situation? So, again, one of the helpful things with the market flow, two things, a pink line and trigger lines going down strong. Traditionally, when you have that look and you're heading into another trend trade short, you get that trend trade short. So instead of getting out and going, oh my God, divergence, and I did it anyway, just, you can see the difference. I could have added on at the mid band, I could have hung on at the mid band, and I could have gotten paid the rest of my money that the 14-2 chart said I was going to get. And literally, I mean, look, that's a difference of $200 a contract. Just for getting jumpy because of a little divergence that didn't mean anything. based on the triggers and the market flow. So again, I did it. It's okay. But you can see the difference in the outcome and what to expect. Now, if you don't get out and they go get you, you can't be mad about it. Right? I mean, but when you look at the market flow, it really agreed with our short. It really agreed with hanging in. The triggers agreed, and we would have gotten more money. Now we've made it to fibs, right? And this is where people really mess up. They start looking at the market flow going, I'm going long because I'm at some fibs and I think I see something. Right? They're like, I'm at some fibs and I think I see a long trade because of the market flow. And there's a couple of things here. You're not at the edge of fibs. So meaning you're not at the last fib on your big chart, which we just got to. So if you try to start taking market flow trades at the wrong spot, they are going to hand it to you. Now, when you get to the edge of fibs, the triggers are horrible here, but watch. We'll see if I can get a market flow something. At the edge of fibs, you see what I'm talking about? Pivot, stop out, last fib. I mean, that's kind of the spot where if they're going to make a run, they can make a run. And we'll look at the market flow. There's a little nuance here. See this bar? You'll see this a lot. Actually, you won't see it a lot, but when you see it, it's usually pretty good. I'll type it out for you. If you get a green dot white paint bar, so white paint bar with green dots on the low, usually it's a good low. Go back and study it or watch for it later. It's a warning that the trend may end. If it's at an edge, it's a low. If you can get in right after it, it's a good attempt, but you got to be quick on your trigger. Anyway, from the right spot, the trigger lines stink on this one, but see how they're past the fibs? So you can talk yourself into saying, oh, I'll do a long trade anyway, since there was a white paint bar on the low. And old Novak said, there's a white paint bar. Forget what my triggers say. Let's just do it anyway. So you'll be like, okay, good. I'm talking myself into it. Man, all right, the little chart's coming along. I'm going to talk myself into it. All right, the triggers are rolling up. All right, I'm committed. I'm going to go. Let's do it. You ready? Let's just go ahead and do it. We'll put an order in. Where are we going to put it? Let's put it at the fibs. Hang on. Let's do it right here. Not right there. That's not the right spot. Let's put it at the fibs, and we'll say, hey, we'll buy the fibs, and the triggers are up. We can justify that, right? I'm going to ignore the fact that my triggers are already past the fibs on the 14-2 chart. And I'm just going to hope that, we get a good... Again, you see the problem, right? I got the box in the way a little bit, but watch. We'll just let this material... If it goes up, great. Oh, we lost. All right. That was quick. We'll analyze that one as we go. And again, this is where maybe you wait for a market flow signal. Maybe it gets back to that green line. We got stopped out there. It's no big deal. I'm not going to mess with it. Anyway, if it works, it works. We got long with the triggers were up. Got stopped out. No big deal. We'll wait for the next one. Now, and a white paint bar down. White paint bar down into a pivot stop out usually reverses, but if it keeps going, well, now we know what's going to happen. If it doesn't get that reversal bar. All right. When we go back and evaluate this, look at this out of the way. Let's take a look at the low, and let's take a look at our larger triggers. Best trigger line look for a long trade? Nope. I let market flow talk me into something I shouldn't have been doing. You will too if you're not careful. So that's your warning shot right there. Anyway, that's all right. I mean, I don't mind a loser. I mean, look, sometimes you take a chance and you have to ask yourself the question, is it worthy of a chance or not? If it is, cool. If it's not, again, that one was, I don't think it was as bad as it looks now, but anyway, I talked myself into it and it wasn't right. Triggers didn't quite agree. Now look, all the triggers agree. Wonder what's going to happen. And I'm filled, and this is the old go up, go up, go up. Now go down, go down, go down, go down. Alright. They do this at the bottom sometimes. And notice maybe could have gotten a little bit closer between the mid-band and the fib. Again, I went a little early. And you have to ask yourself, look, if the fib changes blue, what are you going to do? And the price got above the triggers and the fib turned blue, if we can even stay in this. If it gives us an opportunity to manage or not. It's like I don't want to move my stop back anymore. Having divergence on both charts. Alright, do or die spot. And again, now that we're potential divergence, you see it? Second divergence higher right there. This is where it's like, man, if it starts closing up again, it's not going to go. If it goes down, great. The big chart is dragging us down. Maybe we get away with it. If we get a divergence, we can reduce our risk. See that? So, again, now we're like, okay, should we reduce our risk? Should we stay in? Should we get out if we get another divergence? Well, need a couple bars up for divergence. See how they're weebling around and they're above the triggers? Don't like that. Alright, they got us. And again, you look at it and it's the same situation again. A second divergence above the triggers. Why would you stay in? Why are you going to get out? I mean, we ended up losing, what, a point? Point and a quarter? It's not going to be the end of the world. Large chart says we're still going to go down, but we'll see. Maybe I overthunk that one a bit. We'll find out. Yeah. Alright. Even if we were still in, we'd be watching this thing pretty close right here, right? Pivot stop out on the bottom of everything. Anyway, alright. I opted to get out. I guess it's going to make it without us. Anyway, pretty darn close to the target, right? Lots of fibs, lots of divergences, green backgrounds on the small chart. I mean, that's probably the end of the party. Alright. A little messy there, huh? That's alright. No big deal. Now, again, same situation. We'll go forward a little bit more if you guys want. Getting tired here. Alright. Notice, look at this. There's that bar again. Green bar, white paint, or green dot, white paint bar from the low. Now that one didn't have any triggers breaking the fibs. Anyway, you'll see this. You'll get a white with the magenta dots at the top, or you'll get the white with the green dots at the bottom. And man, they are so often the low or the high. It doesn't happen a lot, but this is a situation where We were really close to the fibs. We had a green background, and again, it's like, do we take that chance right there? And again, I'm totally cool with that, right? The second time after it hits resistance is probably going to be pushing it a bit, but again, I like that little pullback to the fib and the 1-to-1, so we got filled. Again, look, if it really goes, it's great. If it doesn't, we're going to have to be kind of cautious since we hit some Fibonacci resistance. So, first things first, what do you do to be cautious? Move your stop. Really strong triggers, which is really favorable. We got a pivot. So look, let's get our stop up so we don't have any risk in this. Back to resistance, no risk. If it goes, great. If it doesn't, then so be it. Let's look at our big charts. Kind of hard to justify long into that much resistance, isn't it? See how the small chart kind of got us in, and the large chart's going, hey, look at your 8-2 chart. Fib, divergence line, mid-band. Get the heck out, or don't lose any money. Don't leave your stop way down here, coming off a resistance. There's your break even. Just it might go up, but man, it's a really tough spot here. And you see, all right, if we would have left our stop down there, they would have got us anyway. So we'll call it good management. We'll look back at this maybe, and it goes up to the edge of that resistance first, but no harm, no foul on that one, I guess, right? So now we're at resistance on the big chart. And again, look, we've got that same really strong trigger on our big chart again, don't we? We'll see if we can get some more push here and see if we get something obvious. Sometimes when they make that bottom and they get the strong triggers, they're going. So, look at your 14-2 chart now. Now, I think we can justify the thought that we're going to be going back up again, right? So we had divergence from fibs at the bottom. The triggers rolled up. Look, I'll copy paste that. That was my attempt to go long when the triggers were below the fibs, and then look at my second one where the triggers were going up. Anyway, bad on the left, better on the right when the triggers are going up. You get the idea, right? Anyway, I was unwilling to hold through that stop out, seeing as how there was that much resistance. All right. Charts say what? Up. And again, that's obviously up. Look. Again, sometimes it's easy to see right here. Look at this. Look. Now we can definitively say triggers are well past the fibs, right? And again, we start getting these thoughts in our head of let's buy support. And again, when you look at the trend trade on the small chart, it's inside the triggers. So again, I know it's kind of difficult because you're like, oh, there's a lot of lines, but it's, the trend trade itself is strong triggers on the large chart going up, triggers past the fibs, right? That's our look. And then you go to your 8-2 chart, you kind of see the same thing, strong and fibs. And then you go to your 5-1 chart, and again, you see the same thing, right? Fibs and the triggers coming together. All you need now is a pullback. They're really coming together. All right. Now, let's put our targets first. Since our stop's always 3 points, or at least that's what I have mine set at. Again, maybe I'll add a tick or two to it. So look, let's take a look at the look. I mean, this is literally as beautiful as they get. Multiple blue fibs inside of the midband and the triggers. I mean, I actually had my wife adding on in that position on Friday, so I know this trade. And that's the mother lode look, isn't it? It's literally the mother lode look. And again, sometimes if you do multiple contracts or you say to yourself, it's so perfect, it's worth a little more money. So you might get into 2 or twice as much as your normal position, and then the prior high is always a good spot to take some off. If it gets there, it's 5 points, which is that's an extra $500 on a 2 lot. And it doesn't have to go all the way to if it does, great, you're still in it. And again, you don't always get such a perfect look. But sometimes if you do get such a perfect look, sometimes it's worth, having a little more, out there. I mean, if the dealer's dealing blackjacks to you, you might as well double down, right? So anyway, if you can recognize a more than perfect look, which I think this qualifies extremely well. God darn it, missed my target. All right. Now, you can't always stare at the big charts. You have to go. Oh, we got our first target. That's good. Again, you can't always stare at the big charts because you can't see change coming on the big chart, which is very, very important. Again, if they keep going, there's really not much to do. So that was the first 500, pretty easy. Now you start thinking about your smaller charts. You're like, okay, I'm just going to ignore the darn things unless something happens because it's freaking beautiful, right? So we got 1 divergence, 2 divergences, but it's all going up, so we don't really worry about it. You're just kind of relaxing and just, you don't really worry about these too much when it's so strong. You just let it marinate. And this is the hard part. I guess it's not really hard once you get used to it, but you just sit and wait. Let it do what it does. Don't have any control. The only thing you can do is if something changes, you can start managing. You don't want to over-manage a trade when they're perfect. Alright, so look, we came down some. And the background color went red. And that's kind of the first warning that we're losing some momentum. Large chart's still up, but we do have divergence on the 8-2 chart. And we're losing the color on our 5-1 chart, so maybe it's time to start managing. Again, our stops break even plus, so we're not going to lose any money. So let's watch our market flow here too. Uh-oh. Look at that bar at the top. That's one of those white paint bars with the yellow magenta dots at the top. A little bit of a warning. And again, we got a new pivot. And again, we're working on yet again another divergence. This one's different though. Look, right here. The market flow has a pink line there. That's got to watch out for that high volume line, number 1. Number 2, we had that white paint bar off the top. And number 3, we have another divergence working. So it's like, it's got to go or else it's not. Uh-oh. Now look, a white paint bar up into a double top. So this is where the market flow again is like warning us. If it keeps going, it's no big deal. But because the background color is red on the small chart, and we have divergence potential, and we're below the 8-2 triggers, and we have a potential sell signal on our market flow coming, and we're up a ton of money, right? I mean, well, there you go. We got a signal. So a signal short on the market flow got me out, but it was because of a red background and divergence potential, which we got the divergence. And you're always like, well, is it going to go without me? If you make that much money, it doesn't matter. Just wait for the next trade. Now it is 2 o'clock. I won't do any more. And again, we had a lot of trades because we started so early, but this is what you need to do when you're doing your market replay and your practice. Why are you going to manage? Ooh, that was a nice exit. Why are you going to manage? Where are you going to manage? You know, red background with divergence is our management anyway, but we got out a little earlier because of the market flow. And, you know, if you can add a little bit of extra money for staying in, or you can shave a little off getting out, the market flow works out well. So let's do a quick recap. Man, we did a lot. Okay, starting off early. Really easy, right? I mean, that one's a no-brainer. Everything's going down, fibs to fibs, easy. Hit the yellow dots, but we went long and we had to get out. Then we had triggers going up and we tried to go short, and then we tried to go long, and none of that was working. And then they were all going down. We chose not to manage right there. Ended up losing a little. Still not kind of weak, and then everything got strong again. And then once it got strong, look, easy. Short, broke through, short, bad stop, short, short, right? Short all the way down to the fibs. The fibs triggers broke, so we went short again on the small chart, down to the fibs again, and then we had a range, right? We talked about a couple of market flow opportunities maybe where, you know, if you get a couple shots in the range, cool. And then strong triggers up, easy one. Strong triggers down, easy one. We managed, remember the management on that? We got out a little early instead of reading everything. Then we tried to go long at the edge of fibs, but the triggers were passed and we lost. Happens a lot. See that? Again, same patterns over and over. Strong down, and we got out and didn't get paid. Strong up, we got long, and we went to break even because we didn't want to sit the retracement, didn't get paid. And then strong up, we got paid, but then we had to manage because of divergence on the small chart with a red background and the market flow. So the market flow signal plus the red background plus multiple divergences. And again, you're going to really start to, really start to see these areas where you're managing trades and what the market flow is doing at the same time. Really highlights some of those key areas. And again, I'm talking about the 5-1 chart. All right, so what did we end up? A little over $5,000 for the replay session. Again, we had a couple where we did 4 lot and 1 3 lot. So again, quite a bit of money potential. If you're trying to make 400 a day, I think we're going to get you there. Again, I've got to go in and bear with me. Disclaimer. Hypothetical disclaimers, market replay, no guarantees, trading's difficult. You know the drill, right? Practice, practice, practice. Now, on the education page, going through the videos, going through the indicator video. I swapped it out for the one I did last week, which is awesome. You're going to spend a lot of time on the management video. Hopefully this video that we're doing right now helps you with the management thoughts. Maybe you start peeking around at some of the volume analysis and the market flow. Really helpful at key spots. And again, if you haven't started your demo yet, click on the sign up for the demo. Yes, you got to sign up if you want to get software, 10-day free trial. It's only $2.99 a month. We'll justify it. Live educational room from 9 to noon in the morning. When you get your demo, we'll get you all the information to get you in there. And then we'll see you on Monday. Have a great day.